We got a full um, docket today. It's going to be incredible. We're going to keep you a very short time frame. We're in and out from 11 to 12 Eastern time. So we want to go ahead and get started now. Just thank you for everybody who's here. Thank you for in advance for people who are coming, and we'll make sure we pass on this presentation. If you'd like to look at it later, if you can't sleep at night and you're just so excited about technology, you can go ahead and watch this one. And so um, today we're going to talk about innovation and the next technological revolution. So we go to the next slide. This is part of our holistic planning webinar series that we have. And last month, if you remember, we talked about tax planning. You can have the best job in the world. You can make all the money you want to, but it's not about what you make, it's about what you keep. And so one of the big um, items that's really overlooked when you look at total wealth management is tax planning. How much money are you actually keeping? Sharice Jones, CPA, my partner, she gave tons of tips for people to utilize, especially with the big, beautiful tax bill that was passed, how to make sure you take advantage of it. If you didn't receive a copy or want to look at that again, just send us an email and we can send that to you. But again, the next level of this is now you're saving money on taxes. We talked about estate planning before, and now we're talking about investment planning. We're hearing all over the place of everything that's happening right now. We are truly in the biggest technological boom in our lifetimes with what's happening with AI. And there are different components and different parts of that. What do you believe? What's fact? What's fiction? Well, today we're going to have one of the best money managers, and I'm not going to tell their story. I'm going to let Jessie Quick, who's a vice president of the firm, to tell the story of Alger, but phenomenal. And then we're going to have their portfolio manager as well, a portfolio manager for them to talk through what's next, what to look for, and really so now as we make decisions, they can be informed. So there are many different money managers out there, but all are not created equal. And you're going to find from the story and what you're going to hear today, and the reason why we have them here is they're certainly one of the best. So without further ado, I'm going to stop and give it to Jesse Quick. Thank you.
Well, Glenn, thank you so much. I appreciate that kind introduction. Thank you all for joining us today. It's truly our pleasure to be here and to speak with you about what we think is the most exciting time we have ever seen as far as the investment landscape on Wall Street and in stocks in particular. So I'm going to give a quick intro of Alger, who we are, what we do, and then turn it over to my colleague Art to discuss all the exciting things that we see out there in innovation and artificial intelligence in particular. So Alger, we are a growth equity specialist. So when you think of Alger or hear Alger, think of growth. And by growth, we mean that we're investing in change and innovation and all of the exciting things that are happening out there. And I like to use the analogy of a doctor. You know, if you or your family members have a heart condition or, God forbid, some sort of cancer, you're not going to go to your general practitioner to talk about that. You're going to have them refer you, or you're going to go directly to a cardiologist, an oncologist, whatever the particular need requires. And that is what we are at Alger. We are growth equity specialists. This is all that we've done, all that we've researched for over 60 years in our history. And I think that's really unique on Wall Street. There are a lot of generalists out there, and we prefer to do one thing and do it really well, and that's researching growth. A couple other unique things about Alger is that we are a private company, which is also different from a lot of competitors. We only answer to our end clients, to y'all. We don't have to worry about quarterly earnings, et cetera. And so I think that's really valuable in a time like today with so much change. Also, one of my favorites is that we're 100% women owned. which is also really rare on Wall Street these days. Woo woo, right? Exactly. Over 60% of our portfolio managers and research analysts are actually women or minorities, which is really amazing. And so it's something that we value at Alger, but also something just organically has happened. We didn't go out and making sure it happened. Those were just the people that rose to the top and really deserved to be at the forefront of our research process. And so another unique tidbit about the firm. Um, as I said, we've been doing this for 60 years. Our tagline is investing in growth and change. And as Glenn mentioned, there's more change going on right now than ever before. But we at Alger, we're not strangers to change or disruption. We've been through a lot, not only investing in it, but at the firm. I don't know how many of you on the call will be familiar with our particular story, but to start, Fred and David Alger founded the firm back in 1964. They're brothers, started on Wall Street, were really the pioneers of growth equity investing, as we call it today. David was fund manager of the decade in the 90s on CNBC all the time, talking about all of the 90s tech stuff. And really, Alger was the leader. And then tragically, we were located on the 93rd floor of the North Tower on September 11th. Unfortunately, the first plane that hit the buildings went pretty much through our boardroom, and we lost 35 souls that day, David Alger included, and most of our research team. But tragically, obviously we're trying to figure out what to do in the wake of that event, along with the rest of the country. And we're really proud of the fact that we didn't close our doors. We didn't walk away. We rebuilt the firm and are an amazing American comeback story, really persevering through just utmost tragedy. We had about 15 billion under management pre 9/11, dropped down to like 4 or 5. Just, people couldn't stick with us because we'd lost a lot of folks at the firm. But we went back to alumni. They came back to Alger, rebuilt the firm, same process, same philosophy, and we raised that up to the $50 billion range these days. So we're just really, really proud of, sticking with what we do. We believe so wholeheartedly in our process, our philosophy of investing in growth and change, that we didn't just build it once, we built it twice. And so really an incredible comeback story, and one that I wanted to share with you all, as it's important for, just where we've come from, the fact that we've persevered through many market cycles, ups and downs, both at the firm and watching other companies go through this type of thing. So really remarkable comeback story. And if any of y'all make it to New York and go to the 9/11 Memorial, be sure to keep an eye out. Names of the firm are all over the place. And so just an extra little way to connect with, the American history there. So at that point, given that we invest in growth and change, and like I said, persevere, there's so much change going on right now. And we're listening to folks all through Wall Street and the talking heads on CNBC talking about what all's going on, mostly driven from artificial intelligence and the changes that we think that it's going to create both in the economy, in our companies, jobs, personally, school, you name it, healthcare. This AI is touching truly everything, and it's happening faster than anything we've ever seen before. For us, we think that creates a ton of opportunity. There are going to be a lot of amazing winners. There are going to be some losers, and really, it's our job to align yours and other clients' assets with those winners, hopefully avoid the losers. And that's an ever-changing process as new developments happen. And so I'm honored to introduce my colleague Art Novak to you, who's going to help walk us through what we see and give you all some insights from our New York-based team. If I didn't mention before, I apologize. Alger is based in Manhattan. We have been for over 60 years. We have, over 50 investment professionals on staff, Art being one of them. Eyes to dollars, just so you understand, that is some of the top on the street. We really invest in the people that do the research at Alger. We don't, rely on computers and algorithms and things like that to do our research. We think it's valuable to have people really go meet with the owners of these companies, um, the rest of the team, the competitors, et cetera, to understand what's going on under the hood. And so Art has been at this firm for 13 years. He's a CFA, Chartered Financial Analyst, charter holder, which for those of you who don't know, it's a really big deal. It's a really big test, and it means that he's put in a lot of work on the portfolio management side to be here today. He's one of our portfolio specialists, meaning that he is a liaison between our team to our clients so that our portfolio managers can do what we pay them to do and manage investments. And Art can be out here sharing their thoughts to you and to the rest of the team. He's also been critical in creating our new ETF lineup and is a graduate at the University of Buffalo, has a 1-year-old son and a baby girl on the way. So very exciting. So Art, with no further ado, thank you for joining. I'll turn it over to you to share our thoughts on innovation and the next technological revolution. Excuse me, Glenn, sorry, please
No, no,
help.
no, 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 no. So, Art, just right before you go, normally in these presentations, I might stop and ask questions along the way,
Sure,
but this presentation is so phenomenal. I want to give you all the time you need. I'm not going to do that for this one, so you
sure.
can go through it. Just super excited for you to share what you're going to share today. And then at the end of this, we're going to have a Q&A session. So please, everybody who's on here, put your questions in the chat. We're going to have time for Q&A, and I'm sure there are going to be some questions for this one. This one's going to be incredible. So, all right, it's all yours. Thank you.
Thank you.
Sure, sure. Thank you so much, Glenn and Jesse, Glenn, Worth Advisors. Thank you so much for having me today. I'm going to share my screen just so we have the presentation in front of us. But I think basically we wanted to talk about one of the big buzzwords out there today, and I'm sure everybody's hearing about is AI. I think we need to go through kind of what is innovation, what's a history of innovation to understand what's happening today. To Jesse's point, Alger, we've been investing in growth equities since 1964, so over 60 years. And we've seen a lot over that time period. We've seen bear markets, we've seen recessions, we've seen a ton of different cycles. And I think the media, your CNBCs, your Yahoo Finances, they tend to play up shorter cycles. So the Fed cycle, the political cycle, the economic cycle. We think that all of these kind of short-term, 3 to 5 year cycles, they all pale in comparison to the wealth that has been created because of innovation. And honestly, I do think that we're living through the most innovative time that anyone has ever lived through. And I think that says a lot considering, there's been periods where electricity comes about, when the steam engine comes about, the industrial age. I truly think that we're living through the most innovative time in history, whether we're talking about robotics, genomics, biotechnology, autonomous driving, and one of the subjects we're going to focus on today, AI. There's a ton of change happening in the overall environment, economic environment. And Alger is a specialist in investing when innovation speeds up, when disruption picks up. I think that in these periods of disruption, that's when active management is most important. That's when having portfolio managers and analysts researching the companies and the overall industries and really understanding what's going on at a base level is really important in the asset management space. And I honestly, I don't think that the timing of this presentation could be better. There's a lot of volatility in the market to start off the year. We saw something similar early last year with DeepSeek and Liberation Day. And we've really just seen a kind of quick rotation into some kind of more risk-off value areas of the market. But hopefully this deck that we're going to walk through will make you feel more optimistic and positive about the future from an economic standpoint. And I hope it'll remind everyone why it's important to think of investing as a long-term endeavor and not, we always say time in the market, not timing the market. Yeah, I think it's most important to be a long-term investor and understand that. So with that, let's kind of get into the presentation. So, in this presentation, we'll talk about innovation. We'll talk about why it's the most powerful force in the global economy. We'll discuss the new technological revolution that kicked off over the last few years with the introduction of ChatGPT and how that will drive change. And then we'll talk about some investment themes that we think can transcend volatility and transcend short-term cycles. And I think, before we kind of get into AI and everything that encompasses, I think we need to have a little history lesson. And so we're going to take a quick look at a couple hundred years of human history, starting in about 1800, and why we live better lives today than our grandparents did, and why hopefully our grandkids are going to live better than we do. So let's start with this first chart. This is basically how many hours of light you can purchase for 1 hour of work. In 1800, that technology for artificial light was tallow candle. And with that technology, with 1 hour of work, you could purchase about 10 minutes of light. Fast forward to 1880, kerosene lamps were all the rage. You could get about 4 hours of light with 1 hour of work. Mid 20th century, incandescent bulbs, the income of 1 hour of work, you can purchase around 500 hours of light. Now, today, with LED bulbs in 2025, LEDs are the norm. They're extremely efficient, long lasting. The income of 1 hour of work can purchase about 18,000 hours of light. So, in about 200 years' time, we went from about 10 minutes of light producing a 1 hour of work, procuring about 10 minutes of light to about 18,000 hours of light in 2020. So that's a 100,000-fold increase. This is why we're wealthier now, why our standards of living are better. And it's all because of innovation. Innovation is deflationary. It increases productivity and allows humans time to pursue bigger goals. And I think the most important thing here is that the growth is exponential and the amount of change is accelerating over time. Similarly, if we look at, computer chips, exponential growth is important. One of the most well-known interpretations of exponential growth in the technology sector is something called Moore's Law. And this states that the amount of transistors on a computer chip will double every 2 years. And Gordon Moore came up with this law in 1965. And at that point, there are about 64 transistors max on a computer chip. So 64 little transistors on a chip. If you look at the iPhone or the phone that you have in your pocket today, the chip in that phone has over 20 billion transistors. So we've gone from 64 little transistors to over 20 billion transistors. So, and this chart kind of shows that over time, that just like our light example, there's a continued acceleration. And an MIT study shows that this exponential growth that we've seen occurring in light and computer chips occurs in many different industries. If we're talking about information storage like hard drives, fiber optics, wireless telecommunication or cell phones, energy, etc., this exponential growth holds true. And so I think the lesson here is that innovations aren't independent. They're built on the shoulders of innovators of the past. They're exponential, and that exponential growth is powerful. I think, the future is hard to perceive considering how fast things are growing, but we believe that the pace of innovation we're currently experiencing makes the future bright from both an economic standpoint, but also from a way of life standpoint. And so, one of the beauties of innovation, and especially from a portfolio management point of view, is that these important innovations seem to move a lot faster than people think. And people tend to really underestimate the impact that these disruptors have. and the long-term impact of these technologies is often underestimated by both Wall Street analysts and portfolio managers alike. So on this page, we're showing four recent technologies, what the initial forecast, what those technologies were, and how wrong those forecasts were. I think the best example of this would be the first example, wireless subscribers in the 1980s. In 1980, McKinsey, which was one of the foremost business consulting firms in the world, sorry, let me go back up. McKinsey is one of the foremost business consulting firms in the world, some of the smartest minds in the world. They were asked to give a forecast on how many wireless subscribers there would be by 2000. They took that task back. They put pencil to paper, did a lot of modeling, and what they came up with was around 900,000 subscribers. The end result in 2000 was 738 million people. So they were off by about 120 times, not 5%, not 10%, not 50%, 820 times. So how could they get it wrong when they're so smart? They have the smartest people in the world. How do they get it so wrong? I think it's really difficult to understand, how technologies evolve. It's not that more and more people wanted to have cell phones and wireless communication. It's that the fact of the size of the phones were reduced. Back in the day in the 80s, you had cell phones that were this big with an antenna that came out 4 feet. Nowadays, they're the size of an iPhone. So the size of the phone was reduced significantly to easily fit in your pocket. The cost of using the phone came down drastically. Applications around it like email and text messaging were created. And so the utility or the value add around wireless communication grew and grew and grew. So technology often increases exponentially, often faster than the smartest minds out there can predict. And, from Alger's standpoint, this is where understanding technologies and researching companies deeper than others can create a lot of potential from a stock perspective. So let's talk a little bit about what's happening today. And we touched on Moore's law at the beginning a little bit, basically stating that the amount of info processed from a computer chip doubles every 2 years. And this law, this Moore's law, has brought about some of the largest companies on the planet, like NVIDIA or Microsoft or Google, and it has created a tremendous amount of wealth. What's happening today with AI is that it's actually moving 4 times faster than Moore's law. It's doubling every 6 months instead of every 24. And I think, this chart paints a pretty picture, but I think a good visual representation of this, if you were to take a 6-inch plant today and it grew at the pace of Moore's law, so doubling every 2 years, in 10 years, that plant would be about 16 feet tall. So it would grow from 6 inches to 16 feet tall in 10 years. If you look at what's happening with AI and you take that same 6-inch plant and you grow it at the pace of that AI is growing, so 4 times faster, that 6-inch plant would reach outer space. It would be up there by the moon. So, it's really hard to keep up with the pace of AI, and I think a lot of our competitors in the growth space has had trouble with that. And I think if you think that the last 20 to 30 years has had a lot of technological change, we think that the next 20 to 30 is just going to blow that. The 20 to 30 years is just going to blow that away. So we are moving much, much faster because of the exponential growth we are seeing in AI. I'll go through this really quickly. I think one thing that comes along with kind of the changing pace is that adoption rates for newer technologies and newer technologies are diffusing through society much, much faster. I think if you look at This chart basically shows how long it takes for certain technologies to reach 50% market penetration. It took the stove over 150 years. Telephones took several decades. Washing machines, dishwashers took 10, 20 years. Newer innovations are reaching that 50% penetration much, much faster. The internet took 14 years to reach 50%. Social media took 9 years. Smartphones was only 7 years. We look at AI, and it's already past the 50% penetration mark. It took a little bit less than 3 years. So if you look at the stove, took 150 years. AI took 3 years to reach 50% penetration in the US. And OpenAI has predicted that they themselves will have over 3 billion monthly average users by 2030. So, there's 8 billion people on the planet. You know, almost 50% of them are going to be using AI on a monthly or daily basis over the next 4 years. So, we think this is a major tailwind for growth stocks who are purveyors of this change. And we do think it's probably going to be a headwind for value stocks. I think if we think about history, we think about coal stocks, we think about radio stocks, we think about newspaper stocks, we think about brick and mortar companies. These were companies that at the time looked cheap, but because the world changed around them, their fundamentals didn't hold up, and many of them went out of business. They were more value traps than value stocks. So we think this, rapid pace of change, this innovation, this quick adoption of innovation is really setting growth stocks up for the next 10, 15, 20 years. And another significant benefit of innovation is that it tends to be deflationary. I think if you turn on CNBC, a lot of the talk and a lot of the actions by the Fed over the last couple of years have been driven by inflation, driven by the cost of goods going up. We think that technology tends to be deflationary, and part of that deflationary story is that they tend to be resistant to economic volatility, and they tend to grow through recessions or other economic headwinds. I think if we look through history, the railroad expansion happened through panics and periods of flat GDP. Steamships and telegraphs grew through four separate panics or recessions in the late 19th century. Radio and air traffic grew through recessions in the mid 20th century. So there's all these examples of technologies continuing to grow through economic turmoil or headwinds. There's a couple of specific examples on this slide. I think we went through a recession early in the 1990s, which was the savings and loan crisis. And in that 5-year span, GDP only grew 4%. And GDP generally grows, 2 to 3% a year. So 4% over a 5-year span is very, very low. But what we had happening at the time is that we had a personal computer revolution happening. And as you can see from this chart, even though there was a lot of economic things happening in turmoil, PC usage grew dramatically over that time span, even through a recession in 1990. In 2008, I think we all kind of lived through this. We had the global financial crisis. And that was a really tough time for every sector of the economy. And every area was having a really tough time. One area that didn't was smartphone usage. Right at the beginning in 2006, 2005, the iPhone was introduced. So from 2006 to 2010, GDP only grew about 9%. Smartphone usage went up about 335%. So despite the environment, global smartphone subscribers couldn't get enough of wireless technology. So at Alger, we're trying to find these areas of innovation, these lines that are going to go up and to the right, no matter what is happening in the overall economy. That's how we think real wealth is created over time. So I'm going to skip ahead to what we think is the next technological revolution. And we do see technological revolutions happen every few decades. And most of these technological revolutions start with a big bang. If we look at, the age of information and telecom, what happened in the 1970s, it started off with a little company called Intel inventing the microprocessor, which brought us smaller computers, which brought us personal computers. And that really brought in a revolution in how we all process information and communicate today. And so today, we're in what we call a new technological revolution. We call the age of connected intelligence. And this began in 2022 with the introduction of ChatGPT. And you know, the age of connected intelligence starts off with the Internet of Things. So these are all the devices connected to the internet, cell phones, laptops, refrigerators, thermostats, cars, washing machines. These are growing significantly. And I think what this all leads to is what we're the main theme that we're going to talk about is AI. And we think that this is the most enduring theme that we out of all the themes that we've mentioned several times so far. Um, and I think that a lot of people think of AI as Microsoft and Amazon and Google. This graphic here hopefully gives you some idea of how broad we think the opportunity set is here. And this is basically a dissection of a data center. Um, and AI isn't only large language models we hear about every day, like ChatGPT or Claude. It begins with AI enablers. These are the companies that are building out the infrastructure that enables AI. And so, as you can see from this chart, there are many different investment opportunities in a data center alone. And this kind of shows all of the different silos of opportunity within within a data center. So, we start at the top left here with GPU manufacturing. And, I think a lot of people think of GPUs, they think of NVIDIA and companies like AMD and Broadcom. But it doesn't stop with just chip designers. There's also foundry companies like Taiwan Semiconductors. They actually fabricate the chips. There's lithography companies that build machines that help foundries get to the designs on the chips, like ASML. There's also companies that build memory chips. There's RAM and hard drives like Micron and SK Hynix and Western Digital. Um, Outside of chips, there's industrial companies that are helping with the cooling of not only the actual chips, but the structure of the data center itself. These are industrial companies like Vertiv or Comfort Systems. I think when a lot of people think of AI, they just think heavy technology. But we've seen that there's opportunities outside of infotech to invest in AI, in industrials, in utilities. On the power side, there's a number of independent power providers that are signing decades-long power contracts with hyperscalers like Amazon and Google. These are companies like Energy, Constellation Energy, and Talon Energy that focus on renewables and nuclear. I've been at Alger for 13 years, and I can comfortably say for the decade before I joined Alger, we never held a utility stock. Those stocks kind of stayed stagnant. You bought them for the dividend. But last year, we started buying utility stocks because we saw life cycle change because of AI. So those were the hot names last year. And honestly, in our large cap portfolios, we did very well in them. So, these AI data centers are very power hungry. And, if you look at one query when in ChatGPT, you type in a ChatGPT and ask, how can you book me a flight to Tahiti? Um, that uses 8 to 10 times the power of just going to Google and typing in the same query. Still in the data center, if we look on the networking side, there are companies like Astera Labs and Amphenol. Then there's also companies that work on the infrastructure software that help large language models format data into digestible pieces. If you think about, what AI learns from, it's not learning, it's scouring the internet. It's not learning from a neat Excel sheet. It learns from reading blogs and watching YouTube videos and reading social media posts. So companies like MongoDB and Databricks allow large language models to digest this data. Um, Outside of your hyperscalers, there's neoclouds who are building data centers specifically for AI workloads. Companies like Nebius and CoreWeave. Um, and I think the beauty of artificial intelligence and what I think a lot of people miss is that this is all just on the AI enabler side. These are just the companies helping build out the infrastructure for AI. What a lot of people are missing is the adopter side. And we think this could be every company in the entire world. Um, and I think a lot of people are hyper focused on the enablement side and not realizing that as AI diffuses itself through the economy, the next leg of opportunity is going to be the AI adopters. And these aren't companies that are building large language models or putting hundreds of billions of dollars of capex into the ground to build data centers. They're going to be simply companies that adopt AI into their business model to become more efficient or build a better product. And we've already seen companies like AppLovin or Netflix, or even in the stodgy financial side of the world, companies like JP Morgan. In the industrial side, we've seen companies like GFL Environmental adopt AI and become better businesses. So we believe that the opportunity set to invest in AI is vast. We also think it's changing at a pace unlike anything that we've ever seen. And I think this is where the importance of active management can't be understated. We honestly believe that AI will be one of the most consequential generators of wealth and opportunity in our lifetime. So, I wanted to end off here by, taking a quick glimpse into the future about some of the technologies that may be forthcoming. And, going forward, there's a lot of exciting developments on the horizon. And we think that agentic AI up top here is one of the more exciting areas. Agentic AI just means that it can be used as an agent and get things done for you. It's autonomous, and you don't need to constantly be typing into it or giving it prompts to complete tasks. So, I mean, I would think about it like booking a flight today. You might check four or five websites to try to find a good price, or you might go to an aggregator like Expedia.com to look for flights, and that'll take half an hour of your time, and you're constantly comparing prices and comparing times. I think agentic AI is something that's going to be able to look at 5,000 websites in seconds to find the cheapest and the best flights for you. And I think at some point we're all going to have our own co-pilot or agent that will constantly be helping us at work or in our personal lives. I think one thing that we've been hearing a lot about is autonomous driving. And those are coming faster and faster. You know, they have Waymos going in San Francisco and Austin, Texas, and you know they've improved significantly in the recent future or the recent past. So, you know, I think in the future, in the next 5, 10 years, you're going to be able to sit in your car and work from your car. And it's going to free up a lot of that time that we spend driving. And we also think it's going to be safer as autonomous vehicles will communicate with each other and stoplights. And, you know, I think it's really going to remove the human element to driving. I think if we look at gene editing, right now there's certain diseases like cystic fibrosis that we're working on removing through by gene editing. And you know, I think the types of diseases we will be able to target will only get more complex as the technology advances. I think this will, you know, help us live a lot healthier and a lot longer. And I think a lot of that is going to be driven by AI. And I think if you think of kind of biotechnology now, a lot of the time developing drugs is you know, in the discovery phase. And a lot of bioscientists are using the hunt and peck method to see what proteins um, react to different genes in the body. And I think AI is something that's really going to be able to speed that up. You know, the agentic AI that we just talked about will eventually move into robots, into the physical world, which will allow us to have, you know, robot assistants. And through AI, you know, humanoids will be able to learn on the fly through trial and error and communicate to other robots to determine better outcomes. So, you know, I think we'll see AI design drugs. I think they're working on green hydrogen. They're working on, you know, better, um, you know, genomics and genetic testing for drugs. I think the next leg of all of this will be quantum computing. Um, you know, and I truly believe we're at the precipice of significant innovations happening that will really help our lives. And I think if you don't believe me, I think if you just look back to the tallow candle in 1800, where you had to work for an hour to only buy 10 minutes of light, you know, do you think we could have imagined the type of life that we're living now, you know, where we have the internet, we have pretty much all of the world's knowledge in a little tablet in our pocket? Um, you know, I think I'll stop here, but I just wanted to reiterate a couple of points. You know, first of all, we talked about innovation being this huge wealth creator, you know, that is much more important than the shorter cycles that media tries to convince people are significant. We also talked about, you know, innovation is resilient and tends to grow through market volatility. And lastly, we touched on AI, and you know, AI is we believe will be one of the most impactful, enduring investment themes that we will ever see. And Alger as an asset manager is consistently doing fundamental bottom-up research to find the best, most innovative companies to invest in, and we will continue to do so in the future. So we're excited. Our portfolio managers have never been more excited. You'll see them out there talking. They're out there talking to more and more clients just because of kind of how juiced they are about AI and the opportunities we see in the future. So with that, I'll pass it back to Glenn, see if there's any questions, but we thank you for your time.
Well, thank you. Oh yeah, we definitely have some questions. That was phenomenal. Thank you for that. This is this was amazing. You think about it, like the candle. It takes an hour to make it for 10 minutes. And now we're at 18,000 hours and beyond for that same hour. And to know that now we're going to build that times four in the future, that level of growth.
Yep.
It's just an amazing time. Um, so thank you for that presentation. We've got quite a few questions here. One would be the first one is going to be how vulnerable as our nation as we think about power and the
Sure.
power supply. And what are you thinking for a solution? Is it nuclear? Something else?
Yeah, absolutely. That's a great question. I think that's a lot of the reason. So, I mean, I think when you think about power, you think generally people think about public utilities. In
Mhm.
New York, there's Con Edison. In New Jersey, where I live, there's PSE&G. I'm sure there's a similar kind of public utility in Charlotte.
Yeah, Duke. Yeah.
There you go, Duke
Duke Energy.
Energy.
Yeah.
And you know, a lot of the opportunity that we've seen has been from independent power providers. So this isn't your publicly regulated companies. These are companies like Talent Energy and Constellation. And the reason being is that the people who are building out AI need uninterrupted access to electricity. If their data center goes down, it's an issue for them. So they don't want to be hooked up to the public grid where there's kind of, blackouts and things happen where there's overusage. So they're going to these independent power providers. And what we've noticed is that these independent power providers um, they tend to be on the more cutting edge of power. So, they probably have, a little percentage of their business in coal, but generally they're looking at nuclear, they're looking at natural gas, they're looking at solar, they're looking at wind energy. So, I think for the future, I think nuclear is going to be a very big part of it. I think a lot of people are scared of nuclear just because of kind of headline risk. What happened at 3 Mile Island. Microsoft and Constellation just reopened 3 Mile Island. The technology has gotten so much better and so much safer over the last, 30, 40 years. So I think nuclear is going to be a big part. I think green energy will be a big part going forward. I think they're looking at clean energy, sorry, clean hydrogen in the future. So I don't think I think that there's going to be bottlenecks and there's going to be periods where people are kind of fighting for energy. But I think on the horizon we have solutions to those issues going forward.
So what do you think about this to add a part two to this? And I'm not asking for a direct, unless you want to give me one,
Sure,
type of investment recommendation, but you think about alternatives like New Scale
sure.
and those power companies, those, it's had a bit of a dip recently.
Yeah.
Um, what are your thoughts about that type of technology for power?
Yeah, absolutely. I think that anything that progresses and allows us kind of better options and both environmentally and from a cost perspective are going to get a place at the table going forward. I think we've tended to like the actual power providers. So again, companies like Energy, Talent Energy, Constellation Energy. These are the purveyors of the actual electricity. They build the power plants. Um, but I think, going down the line to companies that are testing out new technologies, I think there's always going to be opportunities in the future to invest in those types of names. I think I think solar and wind has, that needs a lot of kind of improvements and technological advancements. But I think in the future, those will definitely be places to invest in opportunities. I know a lot of those stocks have been dinged over the last couple of years.
Yeah, but might be some value there. No,
Yep.
no, thank you for that. So I think the beautiful part about this presentation is that we were able to see not just to invest in Meta or Google and just the Magnificent Seven, but there are many other sectors of this AI boom
Mhm.
that people can invest in that you talked about, like the data centers and other things. So what right now, and we're being, of course, AI specific. Another question is, what part of this industry would you avoid investing in at this time?
Yeah, so I mean, I don't think you can really go wrong investing in this area right now just because of all of the advancement that's happening. I think the beauty of what Alger does as a firm is that, if you're out there picking investments, it's just you. You probably have another job. You don't have all the time to do all the research. We have 50 people sitting at their desk, reaching out to companies, doing fundamental bottom-up research. And so, what we've found through that bottom-up fundamental research is there's certainly some areas in the AI space that are expensive. And I think one area that we really like that we're avoiding right now is cybersecurity. We
Yeah,
love
they've been
companies.
hammered recently. Yeah.
Yep. We love companies, and honestly, the fact that they've been hammered probably gives us an entry point. We love companies like Palo Alto and CrowdStrike. But I think that they've done so well over the past 3 to 5 years that looking at them as an entry point right now might be a little bit difficult. But as to your point, we've seen some volatility early on in this year, similar to what we saw early last year, some AI skepticism around software. And what happens whenever we see some AI skepticism is that sell-offs happen and it's kind of baby out with the bathwater, where everything goes down. And we saw what happened with our large cap portfolios last year when DeepSeek and Liberation Day happened. The market was down 20% in the large cap growth space. If you look at what happened at the end of last year, our portfolio ended up 40%. So, I do think that when we have these little pockets of volatility and the market comes back a little bit, um, that's when we see opportunity. And that's when we go buy names that we thought were too expensive 2 months ago, look a lot cheaper to us now.
Okay.
Yeah. And
Um,
I may add on there just a little bit, Art. You've mentioned software, and I think that software's been, it's obviously been hit here recently, but we've been talking about software and potential struggles with software for years now, once AI can start writing software. And that's kind of what we're seeing is that companies like Salesforce.com or something that was a go-to for every business. It's kind of the backbone of businesses. There's a pretty hefty price tag, but everyone needed it, so we paid for it, right? But Salesforce doesn't actually own any of that data. Salesforce is just the platform that everyone puts their information on, and then it sorts it and gives it back to you in a pretty, little way. What happens when a person, which did happen, writes code using Claude in a weekend that is just as good as Salesforce? What does that mean for, software companies as you look out, a couple years when you can do it for a lot cheaper and a lot faster using these artificial intelligence coding platforms? You know, we don't know exactly, and Salesforce very well might figure it out and, adopt AI and become much better. But I think that is a potential risk to your question of just what types of companies you're avoiding are ones that, you know, with a pretty inexpensive process through an AI, platform, can you create something again? And if so, what does that change as far as what price people can charge for the existing software platforms that are out there? So I think that's an area that's, got some question marks to it for sure, which is why you're seeing some recent price responses in the software sector.
Thank you for that, Jesse.
Yeah.
We got time for two more questions. Um, One will be as we look at OpenAI and Anthropic and SpaceX, these IPOs, um, what's Alger's outlook for these types of investments? And is there excitement? Is there hesitation? Do we think the timing's right? Um, Tell me your thoughts.
Yeah, I mean, nothing but excitement. I do think that there's certain companies that we're a little bit concerned about. I think OpenAI being one of them. They're being hyper aggressive with financing their company. And I think they're going to need to make a ton of revenue to justify the spending that they're doing. So I think just like anything else, we're going to do our bottom up fundamental research and really understand the companies, not just from a value add perspective, but from a balance sheet perspective, from an income statement perspective, from a cash flow perspective, valuation. So, we're definitely, excited about the future of those types of companies. But we're going to take the approach that we take with every company that we invest in. We're not going to just buy blindly because of a hot name. We're going to make sure that the stock is trading at the price that it should be, and obviously have room for growth. So yeah, we're again nothing but excited about the future and what's coming down the pipeline. Um, but um, but yeah, we're going to take the same approach to asset management that we've always had, and we've done so for 60 years.
Okay, we're getting a flood of questions here, so
Okay,
I'm gonna try to get two more in. So we had quick answers.
we'll
Quick
be quick.
answers. Sorry.
Yep.
Okay. Does Alger operate globally? Are you just investing in the United States, or is there global investments?
No, we'll look globally. And we have different we have, EM and international strategies as well that are also headed by portfolio managers that are looking at this technology. I think if you look at our large cap growth um, funds, you would expect, it to be 100% US, but we have companies like Taiwan Semiconductor there in there. We have C Limited in there. We've held Mercado Libre. So, if we think that there's a disruptive company in Southeast Asia or Brazil or in Europe, we'll hold those. And I think that that's what makes us a little different is that we're small enough and we're nimble enough to go off benchmark and hold names that a lot of our peers aren't holding. So we will look globally for opportunities.
Okay. Well, thank you for that. Um, the so two more. We're not gonna get to give five more questions, but we're gonna get to two more
Okay.
really quickly. So, when what industry or has the biggest risk involved, but due to the rise of AI? So, if we're investing more in AI, what should we be divesting in? Um, what industry should we be moving away from?
Yeah, I mean, I think Jesse just spoke to one in software.
Yes.
I think that Dr. Ankur Crawford, who is one of our portfolio managers, put out a paper in 2023 about the declining cost to create. And I think this is a little bit of what we talked about in the presentation is that technology is deflationary and it lowers barriers to entry. And what we're seeing in the software space is the barriers to entry are eroding. Um, I think the argument right now is AI going to take over everything and nobody's going to have a job? I don't think that's what it's going to look like. I think that it's going to automate a lot of things for a lot of people. And I think when they talk about, white collar jobs are at risk, I think the tasks that we do the mundane tasks that we do on a day-to-day basis will be automated. That'll free us time, give us time to do things like this and actually go out and talk to people and understand what people are thinking and what they're talking about from an investment standpoint.
Okay.
So I think I don't know if anything's truly at risk. I think if industries adopt AI and become better industries because of it, that will help save them.
Okay. Thank you. Thank you. Thank you for this. I'm going to stop it now. I thank everyone for joining today. Thank you, Jesse. Thank you, Arthur, for being a part of this. And if you have any other questions or want any other information, feel free to look at the barcode here, contact us, call us, and if we can be of any assistance and be a blessing to you in any way financially, we want to make sure that we give you that good advice. And stay tuned for next month where we have something really special. You'll be getting another email for that one. So again, thank you everybody. Have a blessed day.
Thank you very much.